Joining us now to discuss the crypto markets is Tactive wealth advisor Eddy Gifford. Eddy, great to have you on the show. So you say risk markets in general are beginning to look better. By contrast, your expectations about the Fed decision tomorrow, let us know.
Yeah, I think that there's definitely that possibility of Powell being more hawkish and saying, hey, we're going to stay strong here. But the thing about the Fed recently is they've been 100% transparent. They've done exactly what we've thought they were going to do. So, although there's an outlier risk of 50 basis points, I don't think we see that tomorrow. I think 25 basis points comes in. I think it gives a little bit of a sigh of relief. But that said, it all depends on that press conference afterwards. If he's very, very tough and similar to the mindset that he had during Jackson Hole last year, we could totally see a little bit of a correction in the markets. We've been almost straight up in every market. Bitcoin's up 40% over the last month. The QQQ Nasdaq is up like 12, and S&P's up 7, and so everything is kind of like trending in that direction. So we're probably due for a little bit of breather here anyways. We like to say the markets sometimes have to breathe to hit new highs. I don't know if we're necessarily out of the bear market yet, but it's looking better at least.
Eddy, what are the support and resistance lines you're watching out for?
So I'm looking at Bitcoin. The main thing that I'm looking at is 20,000 on the downside and 25.5 on the upside. So we broke through a downward trend channel in mid-December. We're flat, and then we've been like straight up since then, and then we've kind of flattened out again. So where we see like a lot of support is right at that $20,000 level. And then where we see the resistance is 25.5. So if I was a buyer right now, I would buy, and I would have a stop in place at 20,000. If I was interested in the market but still kind of unsure, which is where a lot of our clients are, we're recommending dollar cost averaging over the next 9 to 12 months because we do have some other factors at play that could benefit too.
You say falling below $20,000. Why could it? What would happen if that were to occur?
Well, honestly, when we're looking at it, there's not a whole lot of support after that until the last year's lows. So if we break through and hold below 20,000, we could definitely see a retesting of last year's lows. I'm hoping we don't end up in that scenario, but it's one of those things where everything is going to kind of lean on the Fed and whether or not they break things a little bit or break things a lot, or if they can get that soft landing. So the appetite for risk is there right now. More and more clients are, jumping in. The question is whether or not this is a FOMO situation or if it's actually got any like fundamentals behind it, because we still do have very, very large debt levels. The savings rate is lower. So if you're looking from a macro standpoint, you say, this doesn't look good. But, you could go on the other side of the coin and say, yeah, but the Fed's been through this before. They learned their lesson and they're going to do it right this time. So it's one of those things you got to play the wait and see game, unfortunately.
All right, Eddy, thank you so much for your analysis. That was Tactive Wealth Advisor, Eddy Gifford.